All right. Hey, everyone. My name is Courtney Richardson. I'm the founder of the Ivy Investor. And I wanted to have a real conversation about one of the memes that was floating around the internet in terms of hiring your children. So, as you may or may not know, and let me clarify, this video is only for educational purposes. It's not intended to provide tax or legal advice. Please consult your tax and legal advisor before instituting any strategies. So let's get started. So I wanted to talk to you guys to say, yes, you can pay your kids, excuse me, not your friends, your kids tax free out of your business proceeds. Um, and I guess I wanted to really talk about some really big picture things is that it has to be out of your business proceeds. Like it has to come from your business and not your everyday income because your business is not generating profit. So that's the first thing. Second, like real life, it has to be things that your kid can do. Like if you are an astrophysicist and you do this for like a living, or you do something that requires like a certain level of skill and there's no kind of ancillary or additional things like filing, cleaning, whatever your child can do, then this doesn't really quite work for you. But I wanted to kind of put that in perspective because a lot of people are getting it confused. They're like, well, can I give my kid money for my W-2 and write it off or my full-time job? No, you can't. It doesn't work like that. But, like, and I tell everybody all the time, like the IRS will giveth and the IRS will taketh away. And the reason why I say that is that with any IRS benefit that's going to be conferred, that you're able to take advantage of, there's always going to be rules and you have to follow them to the T. If you do not, the benefit is destroyed and whatever you're trying to not do, you will do. In other words, pay taxes. So first, your business must be set up properly. So it can be, you know what? Why don't we do this first? Let me bring up the post that has been getting some traction, and then we'll talk about kind of where it goes wrong. Okay, here. So it says you can have an LLC and put your 7 to 17-year-old on the payroll tax-free up to $12,000 a year. He or she does not have to file a W-2 or a 1099. In addition, you will receive a tax write-off for paying them the things the rich already do. Imagine paying your kid $200 a month tax-free into their own bank account when they want shoes, clothes, food, etc. You can pay with their card. Now you're getting a tax write-off for money you give them anyways. But these tax idiots will never tell you this. Okay, so that's what it is. And I wanted to cover it because, again, I want to walk through how it's not quite right. And I'm not even going to deal with the jab at the end about the tax idiots. I'm not. But let's go. So the first thing is that your business does not have to be an LLC. So it can be a sole proprietorship, which means you don't have a separate entity set up. It's just you working on a business that doesn't have a legal entity or a legal structure. So that's the first thing. It can be what's considered a single member LLC. Or it can be a partnership. So it's an LLC with two members, only two members, as long as the two members are parents of the child. So let me go through that again. It can be a sole proprietorship, meaning you don't have a legal entity set up. It can be a single member LLC, or it can be a LLC that's taxed as a partnership or just a regular partnership, as long as each partner is a parent of the child. That's where we are. So then the post goes into the age of the child. It says 7 to 17. Well, that's not really true. So the age of the child, they can be, born day one all the way up to 17 or 17 and 363 days, meaning that they're a minor child. But it depends. The bigger thing is that it's age appropriate work. So here's a great example of employing your child on day one. Say you're a photographer and you actually specialize in taking, newborn photos. Of course, you can take newborn photos and you can pay your child to be your model. So and then there's also a lot of different things that you can do. For example, like what if you do door-to-door marketing and you put in like mailers inside the door slot? A 3-year-old can do that. So again, for the most part, people are like, well, 7, they can actually do some real things in the business. That's true, but it's all dependent on your business. Like I said, if you're an astrophysicist, 9 times out of 10, your kid may not have anything to do other than kind of like regular office filings or something like that. Nothing really in the business, but that doesn't mean they can't help. So here's the thing, true story, before we even get into it, my dad hired me when I was 11. So what I had to do, and people ask me about this, how did you get involved in business so early? Well, my dad actually made me double check his invoices. So my father part of his business was he was a contractor with the state. And every so often he would get these like really large payments because, the state is super slow, but you want to make sure that all the invoices that were submitted were actually received and paid for. So I would have to double check with the check voucher, the invoice, and I would have to double check kind of my dad's internal referencing to make sure that they matched. So I got paid $10 an hour. Only sad thing is that at this point, the Roth IRA didn't exist because I was 11, and Roth IRAs did not exist until, I believe, 1996 or 1997. But, some of the things I could have had that money put away. I mean, who knows what I did with that money? It was $10 an hour. It's good money. But I share that to say, hey, what if, my parents were contributing to my retirement or something like that? Because again, I think it's really clear is that a lot of business owners actually have their kids do work. So the thing is that instead of just making them do work, you can actually pay them reasonable amount of money, and then kind of start saving, teaching them how to save, saving for retirement, doing all those things and really changing the game for them. But anyway, so there was a comment in one of these groups. There's a lot of Facebook groups out there that this is kind of, like I said, been making its rounds. So the Department of Labor, people were like, what about child labor laws? And I said, well, in family businesses, it really doesn't count. It kind of counts, but not really. Depends on the type of business. So no on hazardous business. No minor children can participate in a business that's considered hazardous. Interesting enough, farming is considered a hazardous business. And I share that with you because I know a couple of business owners that have pimp businesses and they want their kids to work out in the field and they want to pay them. And I'm like, that's not going to work. However, you can have them do things like business work in the house, but they can't be physically doing the laboring. So more specifically, the DOL, Department of Labor regulations, which is the federal government Department of Labor, says that family businesses don't have an age limit, but again, you have to be mindful of your state rules, and just remember that your state rules about child working or children working may be a lot more restrictive than what the federal government suggests or has commentary on. And you as a business owner, you have to follow the more strict rules. So if the federal government and your state have the same exact rule, no problem, as long as you're not working in a considered hazardous business. But if your state has a more restrictive rule, such as maybe 5 or 6 or 7 or something like that, or they have more determinations as to what industries children cannot work in, you have to follow that rule. Okay. So I really want to get into the idea of tax-free. Whenever I see tax-free, it makes me cringe. Now, the business owner in me, super excited. The tax attorney or the attorney in me, just gives me heart palpitations. And the reason being is that there's really no such thing as really tax-free, especially in this particular instance. And I'm going to walk you through why that is. So you can pay your kids. So if you remember, the comment said up to $12,000. Not really true. It's actually up to the standard deduction. And after the Tax Cuts and Jobs Act in 2017, the standard deduction changes every year. It's like a cost of inflation adjustment. So in 2018, it was $12,000 even. That was the first year the Tax Cut and Jobs Act was actually enforced. But for 2019, it's $2,200. For this year coming to 2020 or 2020, it's going to be $2,400. So again, you can pay your child up to the standard deduction. But here's the thing. you still have to take taxes out of their paycheck. You'll get them back, but you still have to take it out. Second, you still have to um, submit a W-4 and let me clarify, have a W-4 on file. And then also you need to have a W-2 or a 1099, more so a W-2, because they're actually employees and not independent contractors in most cases. So you also need to have that available for the end of year tax reporting. So it's not like you just say, oh, I'm going to hire my kid and that's it. There's some paperwork that has to go on. And you may have some state and local obligations regarding you having a child employee that you're going to have to adhere to. So this isn't just, I decided to do this and everything is fine. There's more that you have to do. But I like to share this about kind of tax-free and all these ideas is that this is and people have been saying, we've been doing this for years. That's true. A lot of people have. It's called income shifting. So you're basically moving your family income out of a higher tax bracket, which is you as a parent, and you're putting it into a lower tax bracket, your children. And it's an easy way to transfer your wealth to your dependents without incurring federal and estate and gift taxes. So I believe the gift tax this year might be like $15,000 you can give to a children as a gift. But remember, because you are employing them, it's not a gift and it's earned income. And I'm going to talk about why earned income is so important in a second. But here's the tax-free part. So let's clarify. So you're going to have to withhold federal income taxes. You may have to pay state income tax or local income tax. So just keep that in mind. Really talk to your tax professional about this before implementing the strategy. But here's the thing that is really interesting on the federal level. You don't have to pay FICA or FUTA. FUTA, I don't know. People call it anything. No, FICA is, if you don't know what it is, it's the Federal Insurance Contribution Act. So it's basically Medicare and Social Security that you're paying into. The employee, if they were subject to it, would have to pay 6.2% for Social Security tax and 1.45% for Medicare tax. And then the employee, which would be you, would actually have to pay that also. And it all goes into like a bucket. But because any child under the age of 18 working for their parents, working for their parent or parents, doesn't have to pay it. So children under the age of 18 don't have to pay it. Now, the federal unemployment tax, FUTA, or whatever they want to call it, no child under 21 has to pay it. So if you have children between the age of 18 and 21, then they do have to pay FICA. You'll have to pay FICA for them, but you won't have to pay the federal unemployment tax, which is for children. Children don't have to pay it under 21. And it's actually employers paying it on children or paying it on their employees. None of your employees' wages are to go towards the federal unemployment tax. I want to make that very clear because that's how you get yourself in trouble. But just for clarity, the federal unemployment tax provides for paying unemployment compensation to workers that have lost their jobs. So and like I said, it's only paid by employers. And it's kind of offset by your state unemployment tax. But again, this is also another reason why you really need to engage a professional. So let's see. And then also, finally, documentation. I touched on this a little bit earlier, but you have to have a W-4 on file. You can print that offline. Also, you're supposed to withhold income tax unless a child is exempt. And then you are also to keep records of payroll hours and payroll, how much they're working, how much you're paying them, and then also issue W-2 at the end of the year, just kind of regular payroll stuff. You got to have it documented. Because again, I want to tell people this is kind of like an audit flag. So you have to be, when you're doing these types of tax avoidance strategies, not evasion. Avoidance is legal, evasion is not. When you're doing these types of strategies, you have to do it right. And if not, and they're looking for you to do it wrong. So just keep that in mind. So if you have somebody like who's over your shoulder expecting you to do something wrong, what are you going to do? You're going to cross your I's and dot your T's. Or cross your I's. You're going to cross your T's and dot your I's. It's early. Anyway. And then he said, yeah, your business will receive a write-off. So yeah, your business does receive write-offs, and actually the technical term is deduction. So in 2020, we're using deductions, because employee wages are expenses of your business. So they're tax deductible. Yeah. So let me give you clarity on what deductions are. So 28 USC, 28, I'm sorry, 26, gracious, 26 USC is the tax code. So it's the IRC, or the Internal Revenue Code. And 62A makes it very clear that there shall be allowed as a deduction all the ordinary necessary expenses paid or incurred during the taxable year and carrying on any trade or business, which includes a reasonable allowance for salaries and other compensation for personal services actually rendered. So what does this mean to you as a business owner? Okay, you get a deduction for ordinary necessary expenses. So things that go on in the regular course of your business. That's the first thing. And then occur during the taxable year. So if it's incurred in 2020, you can't claim it in 2019 tax year. And then also you have a reasonable allowance for salaries or compensation for personal services actually rendered. So a reasonable salary, you can't be paying your child $1,000 a month to, I don't know, stuff envelopes. That just doesn't make sense. And then for personal services actually rendered, they have to do the work. Make sense? I mean, I think that's pretty fair. And then I've noticed he made the comment of like, this strategy is used, rich people. It's not always used by rich people. You have to still have a business. Not all rich people have a business. And I think we have an idea of what rich people do and don't do, and we just don't know. I mean, and I'm telling you from experience, I've had the opportunity, or however you want to call it, to work with high net worth individuals. The average portfolio was $3 million. There was a lot of things that I saw that rich people did that I was surprised and interested by, and then other stuff, not so much. It just depends on what's going on in your business. You don't have to be rich to pay your kid. You just don't have to. So just keep that in mind. But what you do have to is have income in your business to support it. And then also, there's a little bottom part where he talks about getting a tax write-off for the thing, for clothes, shoes, food. Yeah, no, you can't use custodial funds for things that you're normally obligated to pay for, such as um, food, clothing, shelter for your kid. Can't do that. So, but what you can do, and this is the generational wealth key, is that you can give them some money for them to do things that are going to expand their horizons. But on top of that, what you can do is save for their retirement. And you can do that in a Roth IRA. So you're, because it's after tax money and it has to be earned income. And then imagine starting your retirement at the age of when I started working for my parents, at the age of 11. And you're putting away, I mean, the most that you could put away in 2019 is $6,000. So even if you pay your child $12,000, you can put $6,000, max out the Roth IRA, and then you have another $6,000 that you can do whatever with to kind of enhance and increase their life and get the tax deduction. And that's where you can get the tax deduction. But just imagine doing that every year until they attain the age of 18. So that's 11, that's 12, that's 13, that's 14, that's 15, that's 16, that's 17, that's 18. So that's basically like 17 years. Excuse me, 7. Oh gosh, I was out this morning. That's 7 years of tax, of money contributing to the account. So let's do the math. 6 times 7 is $42,000. And on top of that, it doesn't go towards looking at their college money, because retirement accounts don't count towards what we call the EFC, which is an expected family contribution. So like win, ding, 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 ding. That's kind of where I want people to be excited about what they can do and what kind of, game-changing strategies they can employ in their business to change the trajectory of their lives. But I want you to do it the right way. I want to give you the free game, but I want you guys to do it the right way. So here's the thing. I want to give you kind of, like I said, the game. So just give me one quick second. I'm going to pull up my recap. So let's pull it up. See what we can get over here. I'm going to share my screen with you guys again on the recap. Okay, so pull this up. So recap, you have to have a proper business setup, meaning that you have to have a sole proprietorship. You also have to it has to either be a single member LLC or a LLC or a partnership that all of the partners are parents of the child. So basically husband and wife, or, parents, or however you guys have it set up, but both owners have to be the parents of the child for this to work. Also, the proper age for the child, but more appropriately, age age specific or age appropriate work. And then also, I had to clarify tax free. Remember, I said, okay, you have to withhold the taxes from their paycheck, but they'll get it back. So that's the first thing. And then also tax free on the side of FICA and FUTA. Yes, that is tax free. You don't have to withhold it if FICA if the child's under 18, and if you're still having your child work for you over the age of 18, you don't have to pay federal employment tax until they're 21. And then also, you have to document. You have to have the W-4. You have to have a W-2. You have to do all these things. But also remember, a W-2 and a 1099 is issued by the employer. So a child's not going to give you a W-2. You're going to give them a W-2. So let's just keep in mind, this is why it's really not a good idea to always get your tax advice from me, because they get some things really messed up. So again, a W-2 to 1099 will be given to a child. The W-4 is actually filled up by the child for you to keep on file. And so again, talking about write-offs are deductions, and they're ordinary necessary expenses of business. And that's defined by the IRS tax code. And it has to be for services actually rendered. It has to be reasonable. So just remember all of those really big things. And no, none of this is just for rich people. And also, you can't take any write-offs or actually use a custodial account for things that kids have, that you're already supposed to supply your kids with, which means food, clothing, shelter. Can't use a custodial account for that. So I just wanted to give you that information. Really wanted to have this conversation because, like I said, it's been floating around the internet. But I want you to get it together. I want you to subscribe to my channel for kind of like what we call free game. So it's like free game Sundays or whatever, free games Monday. I don't know. We'll work it out. But I just want you guys to make sure you subscribe, tell your friends, share it so we can all get on the same page. Because at the end of the day, I want you to win, but I want you to do it the right way. Have a great one.